Hello traders, welcome back to the channel. This is your boy Janoy and I'm here with Trading the Charts Pro. This is our live session of Market Outlook that comes out every weekend, every Saturday, where we analyze the market, the entire S&P 500, Nasdaq, and we will look at, one of our main stock that we'll be watching, because here in 2021, I'm going to be doing something a little bit different with the way I'm going to be trading. I'm going to be mainly position trading, meaning I'm going to be managing all my trades as position trades rather than some small trades that I've been to. So I'm going to be a lot less active and a lot more managing huger positions than I was before. So when I did an overall review of how I did my progress for 2020, it was pretty good. I did a lot of work. I was trading a lot. This year, I'm finally graduated, or I feel like I'm moving my trading level one tier up, and this new tier up is going to be position trading. All right, so I hope you stay tuned for this journey to see how we're progressing and everything that we're doing. All right, so let's jump into the charts and start breaking down the entire market and see what we're looking at for this upcoming week and how we should be looking at the overall market, both as a day trader and as a position trader. Right, so guys, here I have a quick chart of the ES futures, S&P 500, and when we look at the overall health of the market, guys, the market is actually doing pretty good. On Friday, not Friday, on Thursday, we had a very strong close, and when we go down to the smaller time frame, we're gonna talk a little bit more detail about it. But we can see, guys, that the market has pretty much been trending. Whenever we're in a trending market, typically we're not really using a horizontal resistance line, or we're not too much using horizontal resistance, horizontal supports. We're typically managing or analyzing the market using the moving averages. So when the markets are trending, the moving averages will start to tell us when something is changing and when the market is doing something that is different from what it has pretty much been doing in the past. And from around November, after the market broke out, the market has pretty much been in an uptrend, and we are pretty much above all the moving average. So this is a healthy market. The bulls are still in control. I would not be concerned one bit unless I see this market pulls back, break the 10 EMA, break the 20 EMA, and start to close below those moving averages. And then at that time, that'll tell me that, hey, there is a pullback setting up, or the market is looking to take a breather. But as it is right now, let's move down to a hourly chart of the ES, guys. When we look at it, we can see that the market pushed up here on the 27, pull back, and we had a nice W pattern holding the horizontal support, right? So this is the very nice horizontal support, and then from there the market actually break out right around the 3,723 level, and the market pushed all the way back up, closed a little bit higher than the old high that was right here, and that is a very bullish sign. Yes, we have just a little bit of pullback, just a little bit of selling. It didn't close at the all-time high, so given that, I'm looking to see, does this thing pull down just a little bit and then continue to go higher. But as it is right now, I'm looking to see things progress and we continue to move higher from here. All right, let's take a look at the NQ and see what the NQ is pretty much telling us overall, and how we should be looking at tech. Again, tech has been one of the leading sectors that push the market higher, and as we can see, guys, after the breakout inside this area, the market has not come back down to this level. So we got one leg up, we'll pull back, found a support right here into the old resistance, and from there the market pushed up. Now at this level, we're starting to see let me clean this up. We're starting to see the market create a little bit of a bull flag right here. As long as that stays as it is and the market breaks out of this level, yes, we're continuing to go higher. All right, the same goes for the NQ. As I was saying in regards to the ES, is that the market has started to trend since November. All right, and when we're trending, it means that we use the moving averages to monitor the price action and know when something is starting to change. Because in a trending market, we're not so much using patterns so much, because the market hasn't been pulling back. We're not in a channel, so we're pretty much just using the moving averages as support. And every time the market comes into the 10 and the 20 EMA, as it's been doing here, so 1, 2, 3, 4, 5 times, that's the area that we're looking to get in and take a long position on the bounce, on the confirmation, and look to ride this higher. As well, I'm still seeing a bull flag set up right here on the NQ on the daily chart. I'm looking to see this break out. So my next real target for tech is going to be 13,000, and this will be the first time ever that tech will actually get up here to this level. But based on the setup right here, I'm very convinced that the market is going to push out and we're going to be seeing new highs for tech. Let's look at it on a hourly time frame. So earlier on Thursday, after we got this push out, the market was kind of consolidating just a little bit, and then we got a pop pushing us up right into the 12,900 level. So I'm looking to see the market, if the market can take this level, which is the top of the resistance of the bull flag, then at that point we're looking to see the market push up. And as well that 100 points is very, very easy for the Nasdaq to run. So if we break the 12,900 level, the next target is actually going to be our 13,000 that we're looking to test. Let's take a quick look at the Dow Jones, because Dow has been doing pretty good as well. When we look at the daily chart, we can see, the Dow has created a very interesting pattern here, where the market break out of the horizontal channel that we were in back down here in September, right? We took that level right here, popped up, and ever since we've just been moving up in this wedge triangular pattern. So this is a ascending triangular pattern. Yes, it's not the sexiest, but when we look at it, the principles stay through. The market popped up, it made this resistance level, right? And then from there we pull back, and we just been pretty much making higher lows every time, working with the very same resistance. Now on Thursday, we can see that the market pushed up out of that, and that was a very, very strong close on the Dow Jones. So I'm looking to see from here we should pop up and the market continue to run up some more. Yes, the market's been going pretty nice, so we got to take the profits when we have it. It's a new year. You should have already analyzed everything that you've done in 2020, see what works, what didn't work, and come back to the game with a very, very strong and consistent plan to help you achieve the goals for 2021. All right, so now that we've covered the overall market, we can see the market is still healthy. The condition is still 100% bullish. Nothing that is causing me to worry right here. This market still riding above all the EMAs, which is very good. EMAs are trending nicely above the 50. Those are all healthy signs. All right, so I'm going to bring you in on one of the stocks that I'm currently watching right now as my first play for 2021, and this is actually CRM. CRM Salesforce. Guys, this company had earnings back here in September. Is that September? Yes, and they popped up, run all the way up to 280 on good earnings. Ever since then, the stock had actually left a huge gap down here at the 212, 218 level, and we can see ever since that gap up, the market has just been gradually pulling back. All right, Now we have come down and filled the gap at this point. Now what's next? As long as the stock can hold the 1218 level and don't break, I'm looking to see, okay, does this thing recover above all the EMAs and continue to move back up? Bare minimum testing the 250 level or filling up this quick gap right here at 240. When it gets to 240, fill the gap, then I will know more in terms of how far this thing is going to go. But when I look at the pattern, big picture, this is pretty much showing me that, hey, the market has run up pretty big since, you know, the crash, and then the stock pulled back, you know, for 3 months. Is this a sign that now after this pullback, the market again is going to look to break out of the 250 and try to come back and test the 281 level? Ever since it touched it back in September, the market hasn't come back up there to that level, right? So this is the number one play on the watch list. The risk level is going to be 218. If 218 breaks, all trade is off. I'm no longer interested in this because it has done something that it hasn't done, you know, at least for the last 1, 2, 3 attempt, and it hasn't broke that support level. So if it breaks, all trade is off. But as long as this level holds, I'm looking for this thing to ride back up. First level 240, second level 254, and if we're able to take the 254 level, I'm looking to see the stock come back and test 281. All right. So yeah, that's the game plan. First trade of 2021. Guys, I hope you found some value in this video. If you did, hit that subscribe button, thumbs up, turn on your notification bell, because here 2021 is here and we're gonna show you guys some. All right. Stay tuned. Look forward to seeing you in my next video.